to another episode of Houston's Hustle Hobbies. I'm Patrick Houston, and on this show, I like to talk about the interesting ways that I make and save money, because at the end of the day, hustling will always be my hobby. So, today I wanted to talk to you guys about, well, not talk to you, I wanted to ask you a question at first. And that's this: how many sources of income do you have? I'm going to tell you this. If your answer is 1, you're doing life wrong. I don't care what age you are. If the answer is you have 1 source of income, or 0, God forbid, then that's a different problem. But if all you have is your paycheck to call your source of income, or your one job thing that you do, you're playing the game wrong. So I'm going to go over 4 different sources of income that you should have at any age. If you can get them. The sooner you can get them, the better you can get them. I mean, the sooner you can get them, the better. I'll go through all 4 just to make sure you guys are clear what they are. Then you can go do your due diligence, or do your research on YouTube, or do your research wherever else to get into them, because this is the way to wealth. I'm telling you right now. First source of income, or source of savings rather, that you will have. This is delayed. Most of these incomes are delayed because you have to let your money do work. You have to let your money go out and do work. So the first thing is simple, and that's just a simple IRA. Simple IRA, Roth IRA, SEP IRA, any one of those types of IRAs. Now, what an IRA is, basically you can put money into it, and then you can claim that money off in taxes. This is for a simple IRA. So, like, say for instance, if you made $20,000 last year, and you put $5,000 in your simple IRA, that means you're only going to get taxed on $15,000. So it's basically a legal way to hide money. Now, the limits to it are, I think the maximum contribution limit, the maximum you can give, is only $6,000 per year. So there are other ways to hide your money, which I'll go over now. So way number 2 is, simple stocks. You're not investing in stocks, invest in stocks. Stocks are basically part ownership in a company. When the company makes money, or when the company goes up in value, you make money. If the company goes down in value, you lose money. So stocks can really help you. Stocks can really help you over time. And again, it's like a lot like an IRA, which is basically stocks too. You feed money into them so that later on, at least over a year later, that money will be given back to you at a discounted price. So, they'll be discounted. They'll be given back to you. Is it tax free? Well, tax free after 55 for actually both of them. So, not stocks. Stocks, you still have to pay taxes on stocks whenever you pull them out. It's only IRAs that you have to pull. That you aren't taxed on after 55. Thing number 3 is the almighty HSA, Health Savings Account. It's the big thing that I'm going to do this year, because I don't have health insurance. I have to go with the high deductible health insurance program, which gives you a lower monthly rate to pay for health insurance. But you are supposed to supplement that with something called an HSA, a health savings account. So basically what that is, you can put up to, I think it's $3,000, for about $3,700 for individuals, and about $7,000 for families can go in this HSA. Now, here's the cool thing about an HSA. If you put that $7,000 in there and you get to a certain limit, you can go to invest the money in that HSA. So remember, the money that you put into your health savings account in your HSA, is tax deductible. So on the end, again, like if you put that $7,000, if you made $20,000, you put that $7,000 in your HSA, you're only going to get taxed on $14,000. So that's another way to hide money. So now, if you remember, You put the full $6,000 into your HSA. I mean, $7,000 HSA, and the other $6,000 into your simple IRA. You've already saved $13,000 from Big Uncle Sam. And there's a couple others. There is crypto. Now, here's the thing about crypto. Crypto's returns are, in at least the year that I've been in, have been absolutely exponential. And I want to say that to you to get you hyper. I'm just telling you what I know about it. Definitely can't last, but I would definitely move my eye to crypto. It's the same as stocks. It's delayed gratification, but crypto is rising, and crypto's rises, peaks, and valleys are on exponential levels because it's so new. So whereas a bad day for a stock might be an 8% decrease, and that's nothing to the crypto world. The crypto world, I've seen swings as high as 30, 40, 50% in a day. You just don't know. So that's just something to be wary of with crypto. And then, the final one, if you got kids kids that are under the age of 5, especially preferably, I would go into a ESA, educational savings account. And you can basically do the same thing with that with an HSA. These are ways to hide your money. Because what's going to end up happening is, if you do follow all these hustles, you are something called a sole proprietor. And since you're a sole proprietor, every single dime you earn is taxed. It's taxed it's taxed on the federal level, and it's taxed for self-employment tax. So you're not getting away from those. So you have to do as much as you can to hide your gross earnings from Big Uncle Sam. Now, there's reasons why not to hide too much money from Big Uncle Sam, for credit reasons, if you need to get a loan later on for your business or whatever you're doing, anything like that. But for the most part, hide as much money as possible so you can have your money. So running the numbers again, let's start off with a $50,000. You made $50,000 for a year. So if you put in that $6,000 for your simple IRA, you put in that $7,000 if you have a family for your HSA, maybe another $5,000 for your CSA, your college savings account, or educational savings account, ESA, and then you're putting your money in crypto. By the way, stocks and crypto, that money doesn't get taxed until you take it out. So if you leave it in there, it's fine. If you want to take it out, I would suggest taking it out after only a year, because it'll be taxed as long-term capital gains, which is less than capital gains. So again, getting back to that, you can put as much money as you want in your stocks, doesn't really matter. Just enough money. The way I would do it, I would invest or put as much money away as possible and live on the absolute bare minimum, because at the end of the day, you want as much as your money working for you as possible, to the point where myself personally, I only leave about $100 in any one of my checking accounts, because my money is constantly working for me. I don't want my money to be close to me. I don't want my money to, because we all have those moments where we decide to go shop crazy. If I can't do it, if it takes me 4 days to get to my money, that gives me a very long time to think about if I want that thing or not. And if I do need that thing, it's probably an emergency, so I'm going to wait that 4 days. So that's where I put all my money, in the stock market, or in crypto, or in HSAs, or in ESAs, or in simple IRAs, for that reason, to save more money in the long term. So that's what I have for you today. If you have any questions for me, please let me know in the comments down below. If you have any other ideas for hustling that you want me to try, just let me know in the comments down below. I am a crazy guy. I will do anything. I will shovel poop if I have to, if it makes me $10,000. I don't give a crap. Anyway, let me know some suggestions down there below. Take it easy, guys. And as always, live high, live mighty, live righteously. Take it easy.